Robschild, no advice. Let's get right into it. Today's Thursday, May 15th, 2025. Today's episode PPI Negative. So rates went down, stocks went up. Also, I've been talking about initial jobless claims, looking out for it to spike higher. It didn't, and the continued claims didn't really spike very high either. Community topics. What'd you do today, guys? I did not do anything. Sat on my hands. Coming up, continuous tariff updates. That was old. Let's just ignore that. Thank you for watching, subscribing, buttons over here, commenting, and supporting. Daily reminders explained in the website in the description. No changes in the crystal ball ratings or the Robschild portfolio. I don't know if you can hear, but my voice is a little off. I'm a little sick. That's why I'm doing a little shorter video today. S&P 500 SPX went up a little bit. Looks like it's running out of steam to me. This does not look super bullish. TLT, my favorite place to be. We are finally fighting in this zone. I wrote this gap fill expecting to get back down here this whole time. I've been talking about this, and we're finally here. Now we have 3 candles inside this gap fill. It's amazing how charts just play out like clockwork sometimes. I also want to bring up the dollar today. The DXY not really falling very much on a bullish day in stocks. So many people are looking at the dollar getting weaker and weaker, and I don't see it. The Russell 2000, represented by the ETF IWM, still under this previous high where we had a lower high and a lower low. And like I've been saying, for the stock market to really get bullish, we need to see the Russell 2000 also be bullish, and it's simply not. It barely struggled at this line, and if anything, this is not building some kind of bull flag looking pattern to me. It looks like it's headed to the downside more than anything. I also want to bring up the MOVE index, the volatility of bonds. It's sort of like the VIX of the bond market, continuing to go slope out, I guess we can say. This coincides very well with this gap fill zone being support, because if we stay in this zone, that's less volatility. It's calming. It's not, the MOVE index is not looking like it's preparing to spike up or anything. We're just settling down. I noticed a little extra large green candle today in XLP. This is consumer staples. When money seeks a little bit more safety, you'll see consumer staples get a bid. That's what we saw today. It went up 2%. Same thing with utilities. It's sort of a risk off move when you see utilities and consumer defensive shoot higher. This one going up 2.13% today. I talked about yesterday a little bit. I had a little too much caffeine. I was a little too overhyped about, because I like to play devil's advocate against myself as hard as I can to see if my ideas still work. And I took it a little too far yesterday, honestly. I was talking about how there's a greater chance of a Fed hike. I didn't even bother looking at the Fed funds futures. It was very clear, very easy to see. But yeah, yesterday, the December 2026 meeting started pricing in a 0.2% chance of one hike. So that's pretty far away, like 18 months. And now it's gone already the next day. This probably has a little to do with PPI month over month being negative. I must bring up the SOFR rate again because of just how low we are. It's not something really to talk about very much most of the time, but when you're, within 5 basis points of the floor of the Fed funds target rate, it just says that money's not levering up in stocks right now. Like, it's not really expected for stocks to just shoot higher right now, just across the board. But one of the big things that is actually supporting the stock market, the way I see it, is junk bond credit spreads being unusually tight. We're at 3.10% over Treasury rates in junk bonds. It means that people are they're willing to believe that lower credit worthy borrowers are less risky. At least they're being perceived as less risky. But whenever junk bond credit spreads get like crazily tight, it's just screaming complacency. It's just like, really, guys, we're willing to only accept this much yield over treasury rates. But hey, that's what the market's doing. There's enough buyers of junk bonds to really squeeze these credit spreads. It's pretty wild. Or maybe I'm wrong, and this, junk bond credit spreads are right, and there is no risk, and there all these borrowers are gonna be able to pay all of their interest and their principal, and none of them will default, or at least such a small percentage that it's worth the extra risk here. I mean, that's what the market's saying right now, even if I don't believe it. Also want to bring up the 10-year break-even inflation rate again today, continuing to spike higher a little bit, but still not above March 27th. Did something in this chart change? I swear I talked yesterday about this getting back up to this high. I don't know. It's still here on Robschild. Not everything is always perfect. Well, what I'm seeing right now in this chart from the Fed is actually lower lows and lower highs still as of today, even though it's shooting up here a little bit. Last thing, 10-year minus 3-month Treasury spread ticking down a little bit, but still looking like in an upwards trend. Again, the last few days we're seeing a little bit of bull steepening, meaning that the market is starting to believe that everything's all right, and we might end up needing to see hikes again. Like I said, the 0.2% in December of 2026 peeking its head into the Fed funds futures yesterday, and just dropping a little bit today. That's something really important to keep an eye on right now. Overall, it was a bit of a boring day. I mean, again, like, the news seems to be controlling a lot of things lately, especially with tariff updates. And then next week we don't really have, the rest of like tomorrow, housing starts, building permits. You have consumer sentiment of May coming out. That can't be right. That's probably April. I'm looking at Market Watch here. But anyway, next week, not hard. There's like nothing. There's like no economic data coming out, except for your typical Thursday initial jobless claims. So the boringness may continue, I guess. I mean, TLT is sort of in a sideways chop. The S&P 500 doesn't seem to know what to do here. It doesn't seem like any market knows what to do right now, actually. But I don't know. That's the way I see things. What do I know? I'm just a guy with a crystal ball. And that's all from me, my crystal ball. Thank you for watching, and see you next time, Robschild.